Markets may be calming, but is it just the eye of the storm? With volatility dipping and earnings ramping up, next week's packed calendar, from China GDP to U.S. retail sales, could spark the next big move. I'm Johanna Bota, and here to tell us what to watch in the week ahead is StoneX's head of global content, John Kicklighter. Welcome back, John. Thank you for taking the time to join us. Let's begin with the general market conditions we're likely to face next week.
So volatility continues to decline, and it does so despite a range of issues that if the market were in a different mood, it would pick up and readily use as justification for retracement, retrenchment, de-risking. But there's a sense of complacency that's become more and more commonplace over the past maybe decade plus. And especially after this past week in the U-turn that we had on those tariff threats after the 90-day delay off of Liberation Day tariffs, it's just reinforcing that sense of that U-turn. And if we are not going to have any systemic risks and we are just going to align to a blase risk on condition, then we're going to reinforce some of the seasonality expectations because seasonality, if you look at it, we're rolling into the 29th week of the year. For a benchmark like the S&P 500, which I think is a great measure of risk, this is actually historically the lowest week of volatility for the VIX in the entirety of the year. Now, of course, past conditions are not indicative of future results, but all the conditions are aligning to it. And if this market is just going to keep treating bad news as just simply not relevant, they're going to keep marching along.
All right, so with volatility easing and markets seemingly numb to negative headlines, what themes still have the power to break this calm and shift sentiment for bulls or bears?
Most themes have the potential. It's just what is the level of intensity that is required for it to shake the market loose of its complacency. And for many of the things that we usually look at, like general economic activity, growth or GDP, it's just too watered down. It's too decentralized and too spread out for event risk to actually have that significant, strong impact. But there are certain things that I do think can suddenly burst to life and seize the markets, and most, I think, notably for most investors, turn it to a risk-off environment. One that is very prominent and certainly has been less highlighted in the past 3 or 4 quarters is earnings. So we have the start of the U.S. earnings season with the bank earnings figures, J.P. Morgan leading that, and it comes out very early this week. So that's going to be something that can directly hit the pocketbooks. If we can U-turn on Trump trade threats and just have a deep complacency and deep skepticism that it'll follow through, with earnings, they're fairly definitive and they always skew to the positive because of GAAP. So if they do come in short or weaker than expected, that is something that may garner greater attention and greater traction. Aside from that, I think we also need to be watching the Fed camp. The Fed obviously is still the highest benchmark lending rate of its major peers. President Trump keeps reminding Powell of this, thinking that there needs to be some rapid rate cuts, which is obviously a more risk-on scenario. There are more Fed officials that are coming out as doves, a little bit more aggressive, Waller and Daley recently. But what does that mean in terms of the upending of capital flow and such? Well, that remains to be seen. It does have the consideration of being more of a risk on if they do start to shift towards risk cuts, but we haven't seen that price into markets or against the dollar, of course. And also thematically, you just have to keep an eye on those tariffs, even though the markets are really leaning into that taco perspective that the Trump administration is always going to change its mind on tariffs and such. You have to be careful because the threats are quite large, especially when you look at situations like Brazil, where they're threatening a 50% tariff starting August 1st. Now, the markets may be skeptical that that's going to happen, but those are pretty hefty levels, and it could shake the market and its confidence.
So it sounds like all we need is a tiny little spark then. What's a big risk or headline next week that could flip the script and get markets moving again?
So through the week, there is a nice smattering of event risk, which is good because this past week we had very little of it. I would focus Monday light, maybe the Chinese lending figures. We always have to keep an eye on the second largest economy in the world, and it's also not in a strong trajectory overall, and that's one to keep tabs on. Obviously, the bigger data from China is going to come Tuesday. the second quarter GDP. This is the first of the major economies to report that quarter's GDP. This is lagging information. The markets take everything that the government data from China has to offer with a grain of salt. However, it is our benchmark. We want to see how it's performing, and then we will compare it to US, Eurozone, UK, Japanese GDP figures as they come out in subsequent weeks. Aside from that, you also have the OPEC meeting on Tuesday, and that is also going to be compounded by US CPI, a very big figure. And in that same morning, competing with the US inflation figure, which will obviously tap into to Fed rate forecasting, is those bank earnings. So we have JP Morgan, Wells Fargo, Citibank, BlackRock. Keep tabs on that. That's a very dense, multi-thematic potential day. Tuesday, U.S. Open, or just before U.S. Open, especially when that convergence of liquidity comes in between London and U.S. Wednesday, we have more earnings. We have in the morning Goldman Sachs and Morgan Stanley, Johnson & Johnson, United Airlines. US PPI, not as important as CPI, but we'll see what the CPI does in terms of creating our focus on inflation and rate forecasting. And then Japanese trade balance in the evening. I would watch that considering the on and off discussions on tariffs that the US and Japan are going through. Thursday, some jobs figures from Australia and the United Kingdom. We have earnings very early. That's actually Taiwan's TSM earnings. So that's the largest chip manufacturer in the world. We want to see how that's doing because it's a precursor to interest in 4 trillion market cap NVIDIA. We also have Canadian business confidence, U.S. retail sales, U.S. housing market sentiment, NAHB's figures, and of course, earnings after hours, starting with some of the tech and Netflix. And then Friday, less of a dense day, but you have U.S. housing starts, and I think the top event risk then would be the University of Michigan Consumer Confidence Report. We want to see how that U.S. consumer is doing, an engine of growth in and of itself for the entire globe, much less the United States.
That is a lot to look out for. Thank you, John. Have a lovely weekend, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.